Hello ladies and gentlemen, welcome to today's webinar. I'm Joseph Novichkov, Senior Trading Manager with GDM. It's Wednesday again, 12 GMT, proceeding with one of our final webinars for this month. It's today and Friday when we're going to talk about 4 additional binary options trading systems. But before we proceed with today's topic, let me remind what we covered so far. It's been extremely successful week, this week and last week as well. We've been trading a lot on gold and oil. It's been extraordinary week to be exact. Profits were amazing. We've seen a lot of downside, nearly $30 in gold. Also, the systems that we've been going through, there were some traders of ours that were using pretty much the same systems taken from the webinars. Also, some of them were actually credited some additional benefits as we spoke for the attendees, which joined us in the firm as traders. Of course, not at the last place, I would like to mention the discipline that they were also taken under consideration has played an extremely valuable role to their success so far. Some of them are attending today's webinar as well, so I would like to congratulate them on being successful, especially with while using our systems. Of course, we've been developing some systems for themselves according to their current status, like account balance, also mental stages, and some of the time availabilities that they have. Also, they are progressing so far so good. This is a time when I would like to mention that if for any chance they're experiencing some setbacks on their systems, or they're experiencing some downturn in their account balance, don't hesitate to get back to us so we can attend to those flaws and of course remedy them. Now let's remind ourselves what we've done so far. In this month's webinars, we've been talking only binary options. We've learned how to choose the right expiry on binary options, especially when it comes to the right time frame, the right system for the current market conditions, so on and so forth. But most of all, what's been in our large favor are the systems which are on time, especially for the market conditions right now. We've been talking for about some very simple systems so far, with using the parabolic support and resistance. Also with a combination of another very simple system involving 2 moving averages, 9 and 14 period, and their crossovers. So the usual time frames that we've been using so far range between 5 minutes to 1 hour and 4 hours. Now, so far for today's topic, ladies and gentlemen, we're going to talk about 2 systems involving time frames. In both of them are actually kind of floating, let's put it this way. Not very useful when we're using them on smaller time frames than 15 minutes. So considering those 2 systems, I will gradually go through that as well, while reminding you, when we're looking at the smallest time frame for today's 2 systems, which is 15 minutes, we will gradually find out which time frames up to 1 hour, which are pretty much most suitable for the 15, 30, and 1 hour time frames. What would be the absolute proper binary options expiry? And of course, we will be talking about how to behave during the expiry of those binary options. because as we mentioned the last time, maintaining a strong mental behavior during the ticking of the during the countdown of the clock of the binary options is very, very important. Basically because you might not be on a profit down to the very second of the expiry, or you could be in a profit down to the very second of the expiry and then move in a negative direction just seconds before the binary option expires. All of this is very important not to mess up during the countdown, because we're talking about a larger time frame where we don't really have the opportunity to open positions every 5 or 15 minutes. Therefore, during the expiry of these binary options, it is very important to remain calm, to believe in your system, and of course it's very important to backtest it before you actually start using it to see whether the system is suitable for your own particular type of trading. And of course, if you cannot find a system that is suitable for you, we can help you develop one, as we usually do. Now, the first simple system that we're going to start with involve about 4 indicators. It's suitable for the 1 hour time frame, and as we mentioned during our teachings so far, when we speak about an expiry, taking into consideration the particular time frame that we're on, it is important to remember that we should at least leave 2 up to 5 sessions or candlesticks to occur on your charts. Ideal is 2 up to 3, of course. It depends on the conditions that you're on. As we spoke in our first webinar, how to exactly pick how long your expiry should be. So we're not really going to go through that. For those that were not there that day when we talked about choosing the right binary option expiry, you can review the webinar. It's been recorded as every webinar, and it's been uploaded in our YouTube channel, free for everyone to review whenever you like. Lately, ladies and gentlemen, I've been reviewing some of the systems that are extremely classical, for classic Forex trading. And I've been modifying them so far for the past 6 months to fit perfectly in binary options trading. And when it comes to binary options trading, we have to have a variety of types of strategies. It's important because sometimes you might not have the time to trade on 5-minute charts. You need a longer period. Say you're busy with something, you need to go somewhere. So you don't really have to look at your platform. The clock is going to do the job for you. It's going to close the trade. That's why binary options are so fit for people that are busy, for example. They don't have to look at their charts all the time and consider whether the trend is reversing or it's continuing or something like that. So you open a trade and let's say in an hour time, you take a look at it, whether it's been profitable or not. And during the review of those systems that I've been fitting through, I've picked today's system, the first one, to be with 2 exponential moving averages, also with a relative strength index, and of course with a stochastic indicator. The input of those particular indicators we'll go through one by one. First of all, let's remind why we're picking those, in what periods it will be suitable for the 1 hour time frame. So if we, all of us have already heard much about the RSI, or the which is the abbreviation for relative strength index, also the stochastic oscillator. Indicator, which is the relative strength index, is mostly used with levels by default 30 and 70. However, I've kept repeating during my webinars that it really depends on which particular currency pair or commodity you're trading in order for you to pick your overbought or oversold levels. Well, let's go ahead and just plot it on our charts. let's see, it should be right over here on the oscillators, as well as the stochastic is down here. We're going to add it a little bit later. Now you can see here that by default we have 30 and 70, also with level of 50, which actually doesn't come with an input of middle level of 50, which I like to use only as a confirmation of a trend or trend reversal, for example, for some of the systems that we've been talking through. But it's an important level because it gives you an overview of the current market conditions, as well as a market direction, which is highly necessary in any condition. Now, the relative strength index with levels of 20 and 80, for example, are used in highly volatile currencies, currency pairs or commodities, where the overbought levels or oversold levels are close to 0 or 100. Let's just put it in here so we can take a look at how it looks. You can see that the price, or in these levels, the relative strength index, it cannot go beyond 100 or below 0. It's very important to understand that because there is no negative volatility, okay? Or there is no volatility more than 100%. It's like, it's impossible. Let's put it this way. But having levels like 30 and 70 for something that it's not that volatile, let's say we're trading a currency pair that stays within that range, rarely goes below these levels. You can see this is level of 21.81, something like that. So in the past few days or the past 1 week, you can see that the price did not went below the level of 20 or 21. Now, for particular high volatile currency pairs, we need to have that level of 20, because once the price moves below that level and starts emerging from it, then we know that the particular currency which is traded against another currency is undervalued, so it's going to start to pick up the volatility gradually, slowly but surely. Also, the same thing is for the stochastic oscillator, for example. It cannot move beyond 100 or below 0, and of course it's one of the leading oscillators, which is also relative to the relative strength index, considers overbought and oversold conditions, but the differences between those two, so let's put the other oscillator as well here, is when we talk about levels. Now, simply because the stochastic oscillator is much faster, more volatile, more sensitive, we're considering levels close to 0 and 100. Therefore, our levels would be 20 and 80. Once we've noticed that these levels are correct and they're actually within the parameters of our particular system, the rules that needs to be kept, we have to find out which would be the other periods for the moving averages of the stochastic, whether it's the slower period or the faster period. We need to consider using 14-3-3. Therefore, for K period, we're going to use 14. For the other two periods, we're going to use 3 and 3. And it's, of course, the method would be simple. This is how it looks on our charts. These are the first two things we need to have before starting to trade these particular that particular system. As indicators, those two, the relative strength index and the stochastic, are pretty much one and the same thing, let's put it this way. However, one of it is slower than the other, and the one which is slower, as you can see here from the pickup of the volatility, you can see that the stochastic oscillator is emerging through its overbought levels, oversold levels, much faster than the relative strength index. And of course, the RSI stays well below the level of 50, which is an indication that our trend is strictly downside at the moment. Once it starts emerging above that 50 level, as you can see, there is either a correction to the trend, ending up in a sideways direction for some time in order for it to continue moving downwards, or of course to change direction. Also noting that the stochastic oscillator is much more volatile in this case, touching overbought and oversold levels much more often than the RSI. Therefore, the crucial thing here when using both is to have a confirmation from the two indicators pointing in one in the same direction, but for the relative strength index, it needs to stay below or above the 50 level. That's why we need it. That's why it's so important to have it. It's an early indication here. We can see an alignment by both, or here is pretty much the same. An alignment from stochastic indicator with its crossover pointing downwards. Later on, we have an additional confirmation from the RSI breaking below the 50 level, staying below it, closing with a few sessions there, and then we can start taking our binary options, which are to direction down for at least 2 sessions, which would involve a closing somewhere within these 2 candlesticks. And this is a system that can be traded only with these 2, but it's not enough, basically because we're after a bigger confirmation, while we are understanding during this time that we're trading on 1-hour chart, and it's very crucial for binary options to have higher certainty in these systems. Therefore, it might get a little bit more complicated when we talk about oscillators and moving averages, but we need that in order to get a better confirmation. Now, one thing is to notice here that we're in a downtrend, so once we start moving, plotting the moving averages one after another, we will notice that a moving average could, cross between moving averages in a directional trend can occur in less occasions, therefore giving us an opportunity to stay within the trend and to trade with confirmations only between the 2 indicators, which is the oscillators below the RSI and the stochastic. The input for the 2 moving averages, of course, we will choose the 5 exponential moving average in this case, and also we are going to put the 10 exponential moving average, 10 period exponential moving average. So let's take, we already have the red one there, the yellow. Let's take something which is also highly not noticeable. I'm going to take a blue one. I think it's much better. Yep. Now, as we can see, the trend here, ladies and gentlemen, is not a perfect 45-degree trend. So that gives us a lot of opportunity, considering the fact that we're trading faster moving averages instead of slower. But we have slower indicators like the RSI and the stochastic, one of it trading on 14 period, the other one on 14.33, basically making it one relative to another, considering the fact that one is more volatile than the other, gives us an opportunity on every crossover for us to either short or go long, or to trade binary options, go down or go up. There was a time when we've had it as put and call. However, we've decided to make it a little bit more simple for traders that are new to the market, tough to understand, for example, or getting mixed up on put and call, which one means what. Therefore, we decided to change it into up and down, which makes a little bit more sense, obviously. Now, here we have our perfect conditions on where we're entering. Rule number 1, crossover or a direction with both moving averages pointing down. Our RSI is below level 50, bouncing a couple of times there, retesting it, then moving lower. A crossover between the two slow and fast stochastics pointing also down. Therefore, we can decide to put to put one trade with expiry of, let's say, not smaller than 2 hours in this case, or 2 sessions, ending in about 35 pips in downward direction, or winning the binary option trade. Also, the same conditions are pretty much the same for long positions or up move. It doesn't matter if we're talking about a downward trend or an upward trend. It's always better to trade with the trend's direction, because you have another 10%, 20% of certainty that this binary option trade is going to be a profitable one. And like a condition like here, for example, a crossover here, the RSI is moving below 50. Our stochastic is also pointing down with a crossover previously to that. Therefore, 2 sessions ending in a profitable trade as well. And as we mentioned, it doesn't matter how big the pip size is in binary options, as long as we've picked the right direction, and after the expiry of the binary option, we collect our profits as a profitable trade. Also, the same conditions apply here. As you can see, the stochastic bouncing off from its oversold levels, going upwards, the RSI breaking that 50 level, a confirmation from the crossover of the moving averages, and also here we trade with not less than 2 sessions, ending in just 1 pip of upward movement, but still a profitable trade. But this condition here, ladies and gentlemen, is a closed call. Therefore, this is just an example of how trading against a trend, no matter if you're a classic Forex trader or a binary options trader, you still have a better chance of a profitable trade if you stick with the trend's direction. Still, for a riskier trader, for the one that is after more profits, more positions, trading against the trend is still an option. Crossover of the moving average, direction of the RSI pointing upwards, breaking that 50 level, also crossover from the stochastic moving higher up, resulting in a profitable trade within 2 up to 5, not more than 5 sessions. Now, I would choose ideally 2 up to 3. I would pick two expiries, because there is some kind of a rule on the market, let's say, when the market is moving against the trend, there could be, let's say, 3 white soldiers if we're in a bearish trend, and the upward move is 3 white, particular white candlesticks, or if the trend is moving up and the correction is 2 to 3 black crows, for example, or 2 or 3 black candlesticks which are against the trend, this particular correction does not go longer than 2-3 sessions. So ending up in a sideways direction for up to 5 or more sessions, this means that the trend has taken a break, for example, for some time. Then we have that sideways trend emerging, and we're not talking about a correction anymore. We're talking about a distinctive direction this time, before it continues moving into the previous trend's direction, or moving against it, reversing it. Which everybody knows, the rule of the trend is that it's more likely to continue instead of reverse. Therefore, these expiries, the choices we have about the expiry, we have to always consider which direction we're up to trade. So if we're trading against that trend, we should actually consider the smaller expiry time. If we're trading within the trend, we should consider slightly longer expiry time, because we can end up in a correctional wave and then, you know, losing that trade because we've chosen, the shortest possible expiry time, and the correction of that trend actually gave us the negativity over our trading history. Therefore, we need a little bit longer expiry time so we can be absolutely sure that we're not going to end up in a market like this one, for example. Okay, we've waited long enough. The market made it move with 2-3 high volatility directions. Then it ends up in a slightly correctional wave before it continues moving down. We're trying to avoid any situation that can occur in the market at any given point of time. Therefore, we have to be prepared for everything. Choosing the right expiry one more time is crucial to our account balance at the end. Now, this is the particular system that we were actually going to talk about it first. Now, let's cover a few things one more time, which are the benefits of the system, which are the flaws. So we're going to start with a few negative things about the system. This is a thing that I usually do because I need to tell you everything that you need to know. The benefits, the flaws, everything. So you can be on top of any situation at any given point of time. So as we can see from these examples that we just went through, the conditions are met perfectly because we're looking at a system and market conditions that have already happened. So it's very easy to say, okay, I'm putting my down binary option here, then I'm going to take it here, and then my 80%, for example, or 70% benefit is going to be in my pocket. But it's very difficult to say in a real market situation like this one, for example, whether we're going to be beneficial at the end of the expiry clock. Therefore, as any particular system, you have to test it first for yourself to see whether it's going to work good for you, whether it's not too stressful, or if you don't understand it well, you need a little bit more guidance, or, for example, you have to choose another system that works better for you. Now, from time to time, of course, we will get some, let's say, particular negative results. You can see that crossover here, with the doji pointing downwards. Our RSI is already broken down. We have our crossover, but then the market picks up and then keeps going down. Now, these conditions cannot be avoided. And as we say, we cannot be 100% certain about any particular system. Trades like these, losable trades, will always occur. You cannot win 100% of the trades. It's very tough to do, let's say. Or you're going to be stuck in a trade for a very long time if you're a classic trader, for example, and that's going to give you a negative balance over the period of time while wait for the position to be profitable. So whether you're a classic trader or a binary options trader, you always have to admit the mistakes that you do, and that to know that there is no 100% sure trade. So we can come as close as it's possible to 100%, but something between the ranges of 70 to 80% profitable system is always good. It's much better than 50-50 chance, obviously, because if all of the systems are 50-50 chance, you stand a better chance in a casino. And we all know that this is pure science. There is no gamble in it. It doesn't matter if we're talking about binaries or classic trading, because some people might say that binary options are strictly gamble because you're betting on a direction. There is no such thing as gamble when it comes to market trading. The only thing we can do is improve our odds by adding an additional indicator or slightly changing the parameters of those that we're using, only to bring it up to date to today's market, because we already know that fundamentals are changing every day. This week, for example, is something else that is moving the market. last week was something completely different. All of these things are a factor that will result into the account balance of your trading account eventually. Now, what is the good thing about this system? When we have all of the conditions, all of the three conditions met, giving the fact that those two moving averages, let's say, they're one indicator because we're not using them separately, we're using them both together, so we're considering it as one indicator. We need to have them all three met and aligned within a few sessions of time. Now, why I'm saying a few sessions? Because the moving averages are much faster in some conditions than the relative strength index, but the stochastic is much faster than both. So first of all, we're going to have this, then we're going to have this, and then we're going to have the crossover when we actually have to enter. Saying this, the crossover will not be visible not until this particular candle appears. So therefore, your trade actually starts from here, 2 sessions down here. Now this is a condition that you will see every day. You need to have a volatile candle first to see that 45 degrees opening of the channel between the two moving averages. Then you're going to see how the relative strength index is moving away from that 50 level, and the opening of this particular stochastic, which will be somewhere, you see, with alignment in time. When the chance comes, it's going to be over here. Now this is your moment of the entry. Some of the traders, however, let's say, firstly, they understand the wrong way of using the indicators like RSI or stochastic. I'm pretty sure around the web you will read, you buy when the relative strength gets close to the oversold conditions. There is no such thing as buying when it gets closer. You can see how close it is here, but how much the market moves for about 16 hours of time before it actually considers making a correction. Let's first understand why we're selling when the market is somewhere here, and when we're buying when the market is somewhere here, for example. You know, not in this condition, but if we scroll back, we will see why we're going up when the market is near the 7 level. First of all, because when the market goes into overbought or oversold conditions, either of the side of the 50 level, it stays there for a while. It stays around this level. This is a volatility indicator. But the market keeps moving down because it's still not exhausted as much that it's actually going to correct itself or keep going up. Therefore, do not worry when your indicator is somewhere over here, and this one as well, saying to yourself, yeah, the market is exhausted, there is no way to go, this system sucks. Well, if you firstly understand the indicators, how they work, what they measure, then you will start seeing those signals that you're looking for. And on the last place, the two moving averages. They're slower than everything else that you see on that chart. So the expansion of these moving averages will happen slowly, gradually during the trend in its development, before it contracts and crosses over again, expanding in a new direction, for example. So until your moving averages are back crossed over, like a condition like this one, for example, here, you shouldn't have to worry about anything and the direction of the market. No matter if your RSI is here somewhere, you can see from the crossover of the 30 level, the market continues with another 30 pips down. And your the fastest indicator you have here, which is the stochastic, is already in a negative territory, or let's say in a oversold condition. So there is nothing for you to worry about, whether you're a classic trader to pick up your final moments before you exit with a 60 pips of profit in here, which is $600 in a one lot trade, or you are actually a binary options trader, which for about 2 hours with $1,000 can make $7,000. So that's about it. There's nothing more easy but to understand what the indicators are, what it measures, why are there, and then you will see how easy it will be for you to trade any system that you pick. It doesn't matter if it suits you or anyone else, because the first thing you have to do is understand it. But this is not something that anyone can do, obviously. So, but in this case, don't get me wrong, I'm not underestimating anyone, or I'm not giving too much credit to anyone, because we're people after all. So turn your attention to us. Let us help you with whatever we can, and you will see how you will emerge as a professional trader eventually. Because this business is pretty much for everyone. The whole conclusion, before we move forward to the final trading system today, is that the simplicity of the system and the time frame that we're looking at gives you an opportunity to choose between expiry time by choosing 1, 2, 3, 4, 5 sessions, for example, a day if you wish for your expiry if you're not sure. You have 3 absolutely trustworthy trading indicators that every trader has on his platform. Therefore, the simplicity makes it so interesting, so powerful, and of course, not at the last place, profitable, which is the thing we all need. The next system, ladies and gentlemen, without losing too much time, because we're advancing extremely quickly, is a system involving one indicator which we have not used so far. The one indicator that we've not used is pretty much fractals. Therefore, I've prepared a very thorough and brief presentation about the fractals, so I'm just going to go through it to tell you what it measures, why we're using it, what are the benefits of it, because we cannot use something that we don't understand, as we have already learned. As I've seen a lot of people actually using random indicators without knowing what they are, it's interesting how I've been talking among among the traders that are using the fractals. One of the most basic ways in which we can determine a trend's direction is using fractals. Now, first of all, I'm just going to go ahead and plot it on our charts so we can start seeing what it looks like, what it actually does, how it changes direction, and of course, not at the last place, how we can use it. Now, if I'm not mistaken, it should be somewhere here, but correct me if I'm wrong. I might not be able to find it extremely quickly because it's not one of the indicators that I usually use at all the time, because it's complicating my charts. And with the connection of the next indicator that we're going to use, one of those that we've already talked about, it's extremely powerful, measures volatility and gives you a direction of the market as well. I have a better, let's say, a better combination suitable for classical Forex trading. But when I have to trade binaries, I'm using the simplest strategy possible. Now, fractals, for example, you have nothing to actually change but the color and the visualization of any time frame. We of course give it on to be on all time frames. This is how fractals look like. The first thing actually have to say here is that the most profitable trades with the following system are made by trading on 15 and 30-minute chart. We're going to take the 15-minute chart. Now, the fractals, as shown here on our trading platform, is best used in conjunction with other indicators, or let's say with combination with the other indicators, to form a good signal, or to make a technical analysis, if you wish. The most common confirmation of a direction when using fractals actually is using the Alligator Oscillator. Now, this is something that we're going to talk about in our advanced Forex trading strategies further on down the road. I'm probably not going to include it in next month's webinars, but this remains to be seen. As we can see here, if we're actually going to trade it as a valid indicator, we cannot take all fractals. The most powerful fractals when they occur in a direction, we can see here, are when it's actually on top of a long candlestick with longer shadow, which is pointing towards that fractal. So this is actually giving you a top. And we cannot really use this one in alignment with our other indicators because we don't have that particular longer shadow. So basically it shows you a direction, but it doesn't have how to say the possibility to modify it, like let's say periods, levels, so on and so forth. It's just there giving you the momentum of the market. But how we pick those fractals and which fractals to pick? You see this one here, there is no fractal on it, even though we have a long shadow, but very, very tiny small body. We cannot use these. Therefore, picking the right fractals in a combination with other indicators will result in a very powerful system. Now, using fractals, we have to note and notice how it actually pinpoints bottom and top. This helps to take, of course, our trading analysis to a whole different level. One indicator that we can use strictly only for a let's say classic Forex traders, we can use Fibonacci levels to determine for how long it's going to correct the market, or towards which levels the trend is going to continue, in order for us to better pinpoint our entry points by taking the fractals as an example as well. So having all this in our advantage, having this particular indicator in our system gives us a very powerful tool when we use it in combination with other indicators, especially for binary options, because it takes not long, but more than 1-2 sessions, as we mentioned, to get us in a profit. Let's go ahead, plot our final trading tool that we're going to use. This would be the average directional moving index, something that I've seen around the web. This particular system is called with different names. I only know it as a simple trading binary option strategy, but there are a lot of names, which whatever it is, you can pick. Now the colors here, I'm not going to touch because, okay, let's switch them between green and red. It will be much easier for us to distinguish between positive and negative trend. And this is how it looks on our charts. It was 14 level, I suppose. Yes, 14 period. With the fractals, ladies and gentlemen, the ADX gives us a much better reading on how strong the market at this moment is. So then on, we know which direction to trade it, which fractal to take as an entry, and then on to trade in that same direction. Now, when the ADX, of course, is trending, and it's not in a sideways direction like this one here, we will see a strong pickup in the ADX itself. The positive and negative directional indices, of course, will also give us another market direction. And in these conditions, this fractal here gives us our market direction. Not only, but because we saw from our previous teachings, market level, ADX level of 20. Let me just go ahead and plot it so we can better see it. Just go see to 20 level like this. This is our 20 level. It's very important because from breaking this level gives us a much stronger trend, or let's say a development of a trend. It doesn't matter if the ADX is falling, the trend can still continue, but then that volatility that we need, the market momentum, is decreasing in value. Therefore, it's not a valid entry signal. This system, ladies and gentlemen, is highly suitable for 15-minute or 30-minute chart because it's very sensitive, and it cannot be traded in a smaller time frame because it's going to give you a lot of fake signals. It resulting at the end in a larger number of lost trades instead of a larger number of profitable trades. And when it comes to binaries, we have to stay on top of a situation, like having more profitable trades than losable trades, because the size of our reward at the end can actually depend on only one trade. But when we talk about classic forex trading, you can have 10 losing trades and only one profitable, but it could be 20 times the size of your losing trades and still come on top of every situation. So, while that said, an example of this system can come here. We have a fractal. Our ADX in this moment is over here. So we still don't have that signal. After that fractal, actually, we saw the volatility picking up. Our ADX moving above level of 20. Now, in this situation, when trading binaries, we don't really care at which level the ADX is going to go for us to close our trade. We only know that we have to keep our binary option expiry rules by picking an expiry which is not less than 2 sessions, making that signal over here particularly valuable for us because we have our fractals, we have our negative directional index moving up, crossed over before that with the positive directional index movement, and of course the ADX itself also emerging above level of 20 with 2 sessions, 1, 2 sessions, and only 3 pips of profit. In this condition, we still have a profitable trade. It's the same one for here with this particular fractal here. We have the price on top of the situation here, giving us a false signal. These are the flaws of this system. Every once in a while, it's going to give you a market direction with a very strong bullish candle here, telling you the market is going to go lower here, resulting in just a few sessions going lower. Also got a very close call, but then the volatility picks up so quickly that our particular crossover, which occurred before the fractal actually, is a false signal. So in these kind of situations, a trader can get a little bit confused. So also as a rule of the system, please trade it in the direction of the trend. And as a, let's say, a better confirmation, all crossovers should occur above the level of 20, or at the level of 20, giving us, for example, higher certainty, close to 80 to 90% even. As you can see in this situation, we have our fractal occurred here, our crossover of the directional indices pointing to downward movement, our ADX breaking above the level of 20, giving us 2 sessions of profit. So these are only small situations. I can give you an example. You can see this one here, the fractal here on top of the shadow, also the crossover here, the emergement of the particular ADX, giving us 1-2 sessions of profit. And the alignment, the periods, and everything about this system comes only for binary options. This system is not suitable for classic Forex trading because the ADX is much faster than that we normally use it in a Forex trading. Gives a lot of fake signals for Forex trading, and the amount of pips is very small when we talk in profits. So you can see here the confirmation comes after the strong bullish candle. Therefore, only 15 pips of profit. Of course, if you're an aggressive trader and you're trading with about 100 lots, yes, then you can use it for $1,500 of profit. That's all right. But 100 lots, that's a lot of money, especially when it comes to classic trading. And with a system that it's not suitable for it. Therefore, this system, ladies and gentlemen, is suitable only for binary options trading. As I mentioned, when you trade with the direction of the trend, it will always give you let's say 8 out of 10 trades profitable by suggesting you a good direction. Now, why I'm saying 8 out of 10? Because in a situation like this one, as we see here, this is market correction. So the fractal or the ADX have nothing to do with predicting the future market movement. So out of these situations, we can't really get anything. And as I mentioned before, losing trades are always going to occur in our account balance, account history. So we don't have to worry about that. We only have to keep pushing forward. And we as a team here at GDM will make sure that we will keep informing you for every market situation by giving you up-to-date trading systems that you can consider to either use as they are at the stage or, of course, modify by your own choosing. And this is our final session for today. Trading system for today. We were going to take a look at 2 more trading systems on Friday, same time, same place. I'll see you then. Thank you very much for joining us. Enjoy the rest of your trading day. Thank you. See you next time. Bye-bye.